In order to see the big picture, we have to connect all the dots. And in trading, it's the same way. If you're going to place a trade, you want to make sure you see the big picture. And in order to see the big picture, you have to connect all the dots. And connecting all the dots is impossible if you do not understand the multiple time frame trade. That is why in this video, I'm going to show you what the multiple time frame trade is. I'm going to teach you how you can use multiple time frames to increase the accuracy of any trade you place and to increase the profit potential of each and every trade as well. And later on in the video, I'm going to teach you a strategy I call the 20/20 strategy that is going to use everything you learn in this video. So if you're ready to master the multiple time frame trade, then go ahead and click that subscribe button down below the video to the right hand side. Click that like button to help us out with the YouTube algorithm. Follow us on Instagram over at The Trading Channel, and I'll see you after the intro and disclaimer to help you master the multiple time frame trade. So what is a multiple time frame trade? Well, simply put, it just means that a trader looks at multiple time frames before placing his actual trade. So if I was taking a trade on an hourly chart, I would look at either the 4-hour or the daily chart. And the reason we're looking at this higher time frame chart, for me, that would be the daily. If I'm trading on the 1 hour, I want to look at the daily. One of the reasons is to get a directional bias. So that is the what when it comes to multiple time frame trades. How do we do this? Well, when looking at this daily chart at my higher time frame, I want to see what trend is the daily chart in. For example, here on the Aussie New Zealand right now, we can see that the Aussie New Zealand is in an uptrend. So with that being the case, the way I would use a multiple time frame trade is if the Aussie New Zealand is in an uptrend here on the daily chart, I want to be looking on the 1 hour chart for long trades, for buying opportunities, so that I'm not going against the underlying trend of this market. And there is a couple of different ways we can do this. One way is by looking at the trend based on 1, 2, 3 moves, based on actually reading trend. But there may be a lot of you out there that don't have a complete grasp on how to read trend right now. If that's the case, I'll put a link to a video in the top right hand corner of the screen. I'm not going to go over all of that in this video. It would make it extremely long, but I am going to show you an extremely simple way of doing this as well. But reading, just very quickly, reading the market in a 1, 2, 3 move would be looking at this as an impulsive move. Our pullback and the break and close above that impulsive move would give us an uptrend. That would be the way of reading it in trend. But for anyone who wants a more simple way of doing it, the other way that I love to use, and what we're going to use in the 20/20 strategy later on in the video, is by looking at a moving average, like the 20 EMA that we have on the screen, using that as our trend. If the market is above that moving average, we're in an uptrend. Below that moving average, we're in a downtrend. So on the daily chart, if I'm above the 20 EMA, then when I drop down to the 1 hour chart, I want to be looking for long trades. In the case that we have right here, we actually have a double bottom on the Aussie New Zealand right now. And I need to send this out to EAP members. I haven't sent it out yet. We have this double bottom here on the Aussie New Zealand that, again, remember, our underlying trend on the daily chart is up. So I'm looking for long trades. We have a pullback into a structure level while I'm trending up, and I get a double bottom. That is perfect for me in terms of a trading opportunity using multiple time frames. Now, let's discuss a little bit more about the how in terms of this multiple time frame trade. Okay, traders, so I took a short break, and now coming back onto the charts, you can see that that Aussie New Zealand trade we took a look at earlier has actually played out really nicely, hitting first targets and looking like we're going to head even higher from here, which is an awesome thing. This is the power of using multiple time frames in your trading. This is the same exact trade we just took a look at. But now what I want to do is go up to a whiteboard and show you a little more about how we can use this multiple time frame approach in our trading. So as we discussed earlier, we're looking for the daily chart, and I'm going to label this with D, to be in a trend. And how are we defining that trend? Well, we're defining it with the 20 EMA. So right here, we'll call this the 20 EMA. We have our 20 EMA, and as long as price will be in black, as long as price stays above that 20 EMA and the bodies of candles don't start touching this 20 EMA, price doesn't start to touch it, then we are considered to be in an uptrend. So if the daily chart is doing this right here. Then what do we want to look for on lower time frames? We want to look for long trades. So what types of long trades do we want to look for? Well, there's actually 3 different types of trades we can look for with this being the case. Now here would be the 1 hour. Let's do some examples of this. On the 1 hour chart, while the daily chart is trending to the upside like this, you can look for 3 different types of trades. The first one is a pullback trade. What that means is the market's pushing up, pulling back, pushing up, breaking through resistance, and you're trying to get in on these pullbacks in order to ride the rest of the trend higher. That would be an example of a pullback trade. And there's plenty of different ways to do that, but that's not what we're going to discuss in this specific video, and that's not the strategy we're going to discuss. I'm just giving you an example of how you can trade in this particular situation. The next example we have is a counter trend trade. So while the market's trending up like this on the daily chart, we can trade in counter trend trades on the 1 hour chart. So what I mean by that is the 1 hour chart might be making moves higher and then have a situation where we start to push down. But as long as we have that bias of a bullish bias on our daily chart, then we can still look for possible counter trend trades, like maybe a double bottom in an oversold market on a 1 hour chart. This is one of the most powerful techniques to use whenever using multiple time frame scenarios. We're going to take a look at an example of each of these on the chart in just a second. But the third way, the way we're actually going to use today with the 2020 strategy, is breakouts. So while the market's trending to the upside, you have 3 different ways you can trade bullish trades: a pullback trade, a counter trend trade, or a breakout trade. So while we're trending up on our daily chart, our 1 hour chart is going to be consistently making breakouts. It'll be consistently pushing up as well. And on these pushes up, we can actually trade breakouts. And that's what we're going to discuss today. And that's what the 2020 strategy is. Before we jump into the 2020 strategy though, let's take a look at an example of a pullback trade and of a counter trend trade while the daily chart is heading higher down on some actual charts. I'll see you there. Here we are on the Aussie Canada daily chart, and I want you to tell me, are we in an uptrend on this chart here on the daily chart? Hopefully you were able to answer yes, because when we were up on our whiteboard, what we discussed is that we want to see a market above the 20 EMA to be in an uptrend. And for me, what I mean by above the EMA is I want to see a candle that does not even touch the EMA. If we're touching the EMA, a lot of the times on the daily chart, that means we're consolidating on lower time frames. I don't want to be involved in that. So I want to see a candle that does not touch the EMA. I want to see that candle close. After that is when I start looking for possible long trades on that currency pair when I'm trading multiple time frame strategies. So in this case, we're going to take a look at a pullback strategy on a lower time frame. We have our condition met that the market is right now in an uptrend based on our 20 EMA and having a candle that closes and stays completely above that EMA. And what I mean by that is the wick of this candle doesn't touch the EMA. The body of this candle does not touch the EMA. No part of this candle is touching the 20 EMA. Therefore, for me, we're in an uptrend on the daily chart. Let's go down to a 1 hour, see if we can find a pullback trade. Here we are on the 1 hour chart, and now we're going to push the market forward and see what happens. So there we have a break and close above a previous resistance level. Now we're going to see if we can get a pullback in some type of entry reason to push the market up. If we do, we're going to place an order on that entry reason, and see how that trade plays out. So let's go ahead and keep looking here. All right, there we have a pullback. Let's go ahead and take that off the chart. The EMA is unnecessary here on the 1 hour. And boom, after the pullback, we have a nice hammer candlestick, long wick to the bottom side, closing in the top 25% of the candle. That to me would be a very nice entry for a pullback trade based on a higher time frame analysis telling me I want to look for bullish opportunities, then dropping down to the hourly, seeing that we're still in trend here, putting in higher highs and higher lows, and pulling back and giving me an entry reason after that pullback. This would be a great pullback opportunity in my opinion. So let's see what the market does. Could win, could lose. All trades don't win. Nothing's 100% in Forex trading, but we have a statistic advantage if you trade not only based on higher time frame trend, but with certain entry reasons and certain types of trades like pullback trades. So if we keep pushing forward, this obviously would have already hit our target. So that's an example of the pullback trade. Now let's take a look at an example of a counter trend trade using this multi-time frame trend analysis. Let's go ahead and look at that over on the Aussie New Zealand right now. Okay, so here we are on the daily chart of the Aussie New Zealand, and I want you to tell me, are we in the correct condition to look for buying trades on a 1 hour chart? Well, none of these candles, you see how we're in this uptrend, and none of these candles have touched the 20 EMA. Our red line's the 20 EMA. So with that being the case, as long as we don't come down and start touching the 20 EMA, then I'm going to be looking for possible buying opportunities. So on lower time frames, like we've been talking about, down on a 1 hour chart is one of my preferences. So what I'm going to do is drop down to a 1 hour chart, and we're going to see if we can find a counter trend trading opportunity. Let's go ahead and do that now. Here we are on a 1 hour chart. And let's see what the market does. We're pushing down. Now I want you to keep your eye on the RSI indicator as well. As you can see, we've now went into an oversold situation. If we're in an uptrend on the daily chart, meaning that we have a pretty high probability of continuing higher, and all the way down on our lower time frame, like the 1 hour chart, we get an oversold situation and a possibility to go long on a counter trend opportunity. That's what we're taking advantage of with what I'm talking about right now. We're taking advantage of that counter trend opportunity because it plays a big part in the overall trend of the market, considering that on the daily chart, we have that nice uptrend pushing up and giving us an advantage, giving us an edge, giving us a bullish bias on this currency pair. So let's see what the market does here. Keep moving forward here. And here we have a double bottom. Okay, we have RSI divergence on the double bottom. One bottom, two bottom. These bottoms are sloping down. Here on the RSI, we're sloping up. This is a fine opportunity for me. And if this trade's looking a little familiar, you're going to see why in just a second. So on that would be our entry, our hammer candlesticks right here, because they're a part of this double bottom, because we do have RSI divergence. We have a lot of things coming together here on this trade. So placing an order, you can see the position tool. And if we just keep moving forward here, you will see that this is the exact same trade we were looking at a few minutes ago. So this is the Aussie New Zealand trade we just took. And I actually sent this out in email analysis to prove to you that I use this every day in my trading. I'll put a picture of that email analysis to the side of your screen. I sent that to all the traders that are a part of the EAP training program earlier today. And it just so happens that this is a great example of a good counter trend opportunity while using this multiple time frame trend trading technique I'm teaching you here in this video. So this was a good example of the counter trend method using this. Now what we're going to do is I'm going to break down the 2020 strategy with you and show you the breakout strategy with a full set of rules. That way you'll have something you can go through the markets and test right now to see what pairs it performs best on and to create a trading plan around it, and maybe even start trading it on your own if it's something you decide you're interested in doing. So let's go ahead and get into the 2020 strategy right now. Okay guys, here we are on the whiteboard, and I'm going to explain this 2020 strategy to you in just a second. But one thing I want to go over first is that if you want to use this on a lower time frame, let's say you're trading on the 15-minute time frame, you would just drop down and have your higher time frame be the 4 hour instead of the daily. So if you're trading on the 15-minute chart, you may want that 4 hour higher time frame instead of looking all the way out on the daily chart for your trend bias. And if you're trading on the 5-minute, I would go out to the hourly to find your trend bias. This works on all different time frames. It's just you have to adjust for the smaller time frames. But here, we're going to take a look at the 2020 strategy I was talking to you about at the beginning of the video. The reason I call this the 2020 strategy is because it's based on a 20 EMA on the daily and also based heavily on a 20 EMA on the 1 hour chart. And here's what I mean by that. Our same rules for trend. We need the market to not be touching the 20 EMA at all. No candlesticks need to be touching the 20 EMA because that signals possible consolidation starting. So we want to see the market staying above that 20 EMA on the daily chart. That's the first thing we're going to look for. Now, this is where it's going to get slightly complicated, not super complicated. It's a pretty simple strategy, but bear with me here and pay attention. And we're going to go down to the actual charts and look at this, and it'll make it a lot easier. But I also, on the 1 hour chart, need the market to be staying above the 20 EMA with the same exact rules. I don't want this market to touch the 20 EMA at all. And on the 1 hour chart, I need to see an impulsive move pushing up, followed by at least a 2 candle pullback from the swing high. Here's the swing high. I need 2 candles pulling back. And I need these 2 candles not to touch the 20 EMA. At this point, as long as every candle stays above the 20 EMA, what I'm doing in the entry of this strategy is at the high of the swing high. So at this point, I'm waiting for a candle to come up and break that swing high. Again, none of the candles can touch the 20 EMA. If any candle touches the 20 EMA, it invalidates the trade. I'm looking for very, very volatile breakouts with this strategy that are associated with a daily trend. So the daily trend being up right here, and now I'm looking for these highly volatile breakouts. And what that means is I'm waiting on the market to push up. The way I know it's volatile is if the pullback doesn't even touch the 20 EMA. And while that's the case, and while that condition is still true, I'm putting a buy stop order right here at the highs. And I'll show you how to do a buy stop order in a little bit later on in the video, but don't worry about it. It's like a limit order, except you're buying above price instead of below it. But I need this pullback from our new swing high. So bear with me here. We need a high, the pullback breakout. We need a new swing high, this right here. We need the pullback of at least 2 candles that does not touch the 20 EMA at all. And then we need a candle to, it doesn't have to be the very first candle after the pullback. We just need price to come up and break through this swing high. At the moment that it breaks through that swing high, we are entered into a trade. And for stops and targets, I use 1 ATR plus 5 for stops. And I'm just using a 1-to-1 risk reward right now in the testing process. And that is the entire strategy. And what I'm going to do is go down to the charts. We're going to go over it a couple more times to make sure that you have a complete grasp of the 2020 strategy. And then you'll have everything that you need to actually take this strategy and start testing it yourself to see if it's something you want to incorporate in your trading plan, and to see if multiple time frame strategies fit your personality well, fit your trading plan well. So let's go ahead and dive down into some charts and check out a few examples of the 2020 strategy, go over the rules in a little more detail right now. I'll see you down there. So here's an example of exactly what we're looking for. We're looking for a market. We've already discussed the conditions on the daily chart. Now that we're here on the 1-hour chart, we want to see a market trending under the 20 EMA. That means that we're putting in lower lows under the 20 EMA. We want to see a pullback that consists of at least 2 candles and does not close above the 20 EMA. And then we are going to place an order. I am going to place an order. Don't go out and trade this right now. You need to test it for yourself. I would place an order at the low before the pullback, the swing low, before this pullback occurred. That's where my order goes. It's going to be a sell stop order. I'll teach you about that in just a second. A sell stop order there. I'm going to do a 1 ATR plus 10. The current ATR is 9, so that means I'm going to have a 19 pip stop loss. So my stop loss is going to be right here. I'll do that in red. So I have my entry and my stop loss set. I'm going to put a target at a 1.5 to 1 risk reward. So let's do that. This is going to be a trade that you'll see in just a second. It's on market replay, so just hold on. Bear with me for just a second. And a 1.4 to 1 risk reward would put me right there. Okay, so let's see what happens on this specific trade. If we move forward, remember we don't want a candle to close above the 20 EMA. If it does, it's an invalid trade. If we don't have anything close above the 20 EMA, we're still looking for the breakout of this low. Our order is actually at the low. So if we get a push down to the low, we're entered into the trade. Let's keep going. No close above still, we're good. And there we are, we're entered into the trade. So right now we're short on the Aussie New Zealand, wanting to get a 1.4 to 1 risk reward. Our stop loss is sitting right up here above our swing highs. So let's keep going and see what the market does. Continuing to push down, we push back up, down again. See if we get there. And there we go. If we put a horizontal line right here, color that green, you can see that we came down and hit those 1.4 to 1 targets. So now let's go ahead and take a look at a couple of other examples of this. This was just an idea of what it would look like trading it live. But now I'll show you a long example and talk you through a few of the other actual rules of the strategy, so you'll have a set in stone rules-based strategy. You can go out and test this 2020 strategy right now. A practical step is testing it to figure out what pairs it works best on, And then you can decide whether or not you want to incorporate it into your trading plan. So let's take a look at a couple of other examples of the 2020 strategy right now. Okay, so what I want you to do is remember on the daily chart, we're making sure that this market is above the 20 EMA, and we have a full candle that's closed above the 20 EMA. That means it's not touching the EMA at all, and it's above the EMA, giving us a bullish trend on the daily chart. With that being the case, we are now looking for a swing high in a bullish trade. That's what we're doing right now, is bullish. A swing high followed by at least 2 candles pulling back that does not close below the 20 EMA. And then we have our order set at the high of that swing high. We have a stop loss set below the lows, or 1 ATR plus 10 is what I'm using right now. So in that case, our order right here would look like this. We would have our entry at the top of that candle, just like this. 1 ATR of that candle. The candle that was the swing high, not the entry candle. The swing high candle is the ATR we're looking at. So we're looking at that ATR, and it is right at 9, so we would have a 19 pip stop loss, which does not get stopped out. Remember, we entered the trade over here. This is our entry. So after the entry, we didn't get anywhere close to our stop loss, and we have a 1.4 to 1 risk reward on this specific scenario. And that's what that trade looks like. Now, let's go over what a buy stop order is. In order to place a trade using a strategy like this, you'll have to know and understand buy stop and sell stop orders. All a buy stop is you getting into price above where current price is. It's like a limit order, but instead of having to be below price, if you're wanting to buy with a limit order, and let's say price is right here, your order has to be below price. But if you want to buy with a buy stop order and the market's right here, your order is going to be above where price is currently. So remember, if the market is on this candle right here, we have to put a buy stop order in order for the market to put us in on a breakout situation. In order to do that, I use TradingView as a trading platform. All I do is hit right click and then hit our create new order. Damn it, I'm not signed into my account. All right, hold on. Okay, let's do this one more time. All I do is right click the chart, click create new order. Then I have buy, and right here you can see stop. If I have a buy stop order at 1.0738, which is where I have it right now, and I can go ahead and put in my stop loss of 19, and I can do my risk of 2%. All this is already done for me. All I would have to do is hit buy. This is an actual order, so I'm not going to, but all it means is that if the market was right here on this candle, then that means I'm telling my broker, if the market gets to the price of 1.0738, I want you to buy me into the market. I want my stop loss to be down here where the red zone is, and I could put in the target as well using this little order form. That's a buy stop order, and you would use that for a buy trade using a strategy like this. You would use a sell stop order in the bearish direction for a sell trade using a strategy like the 2020 strategy. If you have any questions about the 2020 strategy, put them in the comment section below. I'm going to be answering questions for the first 24 hours of this video being released about the strategy. Hopefully I've explained it to the point that you're good to go. And if you want a little more advanced material, then we do have some spots available in the EAP training program. This is the same program that I sent out that Aussie New Zealand email alert in. You can see that on your screen. You can see where the Aussie New Zealand is now. All trades don't win. That's not the point of the program. And these aren't even meant as signals. But what the program is here for is to put you through an entire training course that I'll put on the screen now that will show you some of the exact strategies I use. And strategies aren't the only way to be profitable. You need more than a strategy to become profitable. So we also teach you how to build a risk management plan, how to back test so that you can actually build that risk management plan and become confident in your trades. We teach you how to build a full trading plan. And again, I share with you all of the strategies that I use on a day-to-day basis, including the same exact strategy I used to get involved in the Aussie New Zealand trade you see on your screen right now. What I'll do is post a few comments from some of the traders who have recently graduated from the EAP training program. And if that sounds like something you are interested in, feel free to click the link in the description. Should be the top link. We've had a couple of spots open up due to recent graduates. And in this program, it is a mentorship program, meaning you will have something called priority email, where you can email me at any point you have questions about Forex, about the course, or about any of the strategies involved, about risk management or discipline. And I'm here to guide you on your path from wherever you are to creating the successful trading career you've always wanted. So again, if that's something you're interested in, it is the top link in the description. If not, that's totally cool too. Just make sure you are subscribed here so that you get alerted about these videos we come out with, these value-packed videos each and every week. Click that like button for me. On Instagram, I'm actually going to post a day trading strategy, and I'm going to post it here on YouTube as well, but I'm going to wait 2 days before I post it here on YouTube. So if you want first access to the day trading strategy that I used earlier today, actually, to make a little over 120 pips in less than an hour, then that will be over on Instagram later on today. So head over there, give us a follow, and I will talk to you in the next video. We're gonna have a part 2 and a part 3 to this video. In this video, we were talking multiple time frames with trend. In the next video, we'll do multiple time frames and how you can trade around structure, and I'll lay it out in the same exact way with a full strategy towards the end of the video. And in the third video, we're going to talk about how to use indicators on multiple time frames in order to increase those profits and increase your winning percentage. That was a lot to say here at the end, but that is going to do it today, guys. I hope you're trading green, and I hope you continue to. I look forward to seeing you in the next video, seeing you over on Instagram, or seeing you in the EAP training program. It would be a pleasure to work with you. Be safe, stay healthy, and I'll talk to you next time.